Cast is now starting. All attendees are in listen-only mode.
Hi, this is Jacqueline from National Mortgage Professional Magazine, and I would like to welcome you to today's webinar, sponsored and presented by Ray Bartrow of Best Rate Referrals. I would like to thank all of our webinar attendees for taking the time out of their busy days for this very valuable and informative webinar in our ongoing series of webinars. A leader with more than a decade of combined mortgage and direct marketing experience, Raymond Bartrow is founder and senior vice president of mortgage partnerships at Best Rate Referrals, an award-winning firm generating high-quality mortgage leads as well as driving inbound calls to mortgage lenders. Best Rate Referrals has a long history of connecting high-intent consumers with a diverse network of lenders for a variety of financing products, including home purchase, refinance, and more. Throughout his career, Raymond has continued to empower mortgage lenders with the strategies and insights to better connect with consumers and close deals. A sought-after speaker and award-winning professional, Raymond was just named a 2017 Housing Wire Insider by Housing Wire magazine. He has been listed on National Mortgage Professional Magazine's list of top 40 under 40 multiple times and appeared on the Mortgage Professional Association Hot 100 list. Raymond began his career in the mortgage industry as a loan officer, providing him with a depth of experience that is regularly tapped in his role leading the Best Rate Referrals team. If you have any questions during the webinar, please be sure to ask them on the GoToWebinar console, and we will try to answer as many questions as possible at the end of the webinar. Without any further ado, I'd like to turn this over to Ray Bartrow.
Thank you. Thank you very much. Great introduction. I appreciate that. Thank you all for attending the webinar today. I know it's been a busy week and a lot of things going on, new month and all of that. So I appreciate your time today. And hopefully I can share some valuable information with you guys that will help you with your business and your marketing in the current state that the industry is in. As they mentioned, I founded Best Rate Referrals about 15 years ago. As I felt that a lot of the marketing platforms out there that we had when I was a loan officer just didn't seem to create a consistent and efficient way for me to run my business, and I really fell in love with the marketing side of the business. I'm going to spend some time today to go over the latest marketing trends, and also some strategies to maximize the hot markets that are live today, as well as we're going to talk about loan programs and that are the most effective in today's environment, which marketing tactics are the most successful in reaching the consumers, and ultimately how can lenders differentiate themselves in such a competitive market. So we're going to dive in here, get a little bit more information about us, 15 years mortgage experience, and Housing Wire, National Mortgage Professional. I think Beth did a really good job of covering all of that. So I'm going to go ahead and jump into all the products that we offer just to get a good understanding of the marketing channels that I'm very familiar with. We have a call center in Clearwater, Florida. We generate several hundred verified live transfers a day. We also manage and operate several websites, generate internet leads as well as inbound calls from consumers that are searching and finding our site. We also offer direct mail services, different calling lists and mailing lists. We do full service direct mail campaigns. And for those of you that have your own call center or are looking to open your own call center, I do a tremendous amount of call center consulting as well. So, kind of diversified within marketing channels, can touch on everything, and I have a lot of experience in this. And so hopefully we can share some great information with you guys. Through thorough research of the market, development of our technology, we have connected over the years millions of consumers and vendors. We're focused on the mortgage product people that they want today, right? So if they're looking for example, if they're looking for a VA purchase loan, we're going to try to connect them with a lender that focuses on VA purchase, as an example. Our programs are built for efficiency, consistency, and to help our clients partners achieve the sustainable cost per funded loan to help you guys strive in your business. It's no secret, rate and term refinances have declined, right? I mean, we had a really good run for, going on 4.5 years now, 5 years now, where there was a tremendous amount of volume being originated with FHA streamlines, IRRRLs on the VA side, And just the whole rate and term market was very strong for a while. We had a great run there. As interest rates trickle up, I know that we had a jobs report come out tomorrow that will alter, what rates do one way or the other. I'm under the impression, based on the research that I've done and the folks I talk to that are high-level guys in the space, that rates are inevitably going to start increasing, which is going to kill the rate and term market even more. So with that said, what's next, right? What's the new program that we can all go after and still run our business consistently and also scalable. So these are the 4 programs that I see as scalable options, different abilities to reach the mass market and really drive volume into your business line. You've got non-prime, you've got purchase, obviously, which everybody's aware of, with the increases in equity, home values, cash out or equity loans, basically tapping into equity in home. So cash out refi is a really big one. And then despite all the changes recently in the reverse space, I seemingly think that the reverse space is going to continue to grow. It will be a little bit harder, and will the cost per fund be a little bit higher? Due to those changes, possibly, but I believe that the changes are a positive one for the space, and I think for the consumer confidence in the product. So first one we're going to talk about today would be the non-prime. I'm going to share some statistics with you guys that you may or may not know, but I'm going to share them anyways, and hopefully pull something of value out of these. So according to Wallet Road, the average credit score in the U.S. is anywhere from 659 to 699, depending on which credit score model that you're using. Generally, a score below 550 is considered poor in the lead gen world. According to FICO data, 11.7% of the population has a score of 549 or less, pretty significant little chunk. And when it comes to younger millennial borrowers, TransUnion states that 43% of the borrowers aged 18 to 36 had a credit score of 600 or below. It's almost half the country. So it's a pretty significant chunk of business there. And as we know, back from the subprime days, most of these lenders kind of steered away from this market. But as many of you know, they are coming back into this quote-unquote non-prime market. On our side of the lending industry, from a lead generation standpoint, when we run our reports at the end of each month, we see between 15 and 25% of all online mortgage leads generated are telling us that they have poor or fair credit on the form that they're filling out, right? So pretty significant. Again, been a good chunk of business that for the last 3 or 4 years has predominantly been hitting the floor. Well, now that it's coming back, it's a little bit, you can help a lot of these consumers, and it's a segment of the market that is not saturated like the excellent and good credit borrowers. So conversions, as long as they qualify conversions, should stay pretty good. The other benefit is that these leads, because there's not as much demand for the non-prime market, these leads end up being a little bit cheaper than those of excellent and good credit, where pretty much every lender in the country that we work with wants. So again, fair and poor credit, good opportunities. You can tap in with the wholesalers that offer programs for non-prime. I suggest doing so. Gives you the ultimate ability to help as many people as you possibly can. And from a marketing dollar standpoint, this is a really good segment to go after. As you know, home prices have been on the rise now for the last few years. It's no secret that when prices rise, equity rises, which opens up some other opportunities for homeowners. If you look at the latest house price index from the Federal Housing Finance Agency, home prices have continued to increase in the second quarter again, which is great, as well as the third quarter. It hasn't come out yet, but we know that it has increased. U.S. home prices rose nearly every state during the second quarter. New home sales are climbing, but relative to the overall population, they still remain low from a historical perspective. The tight inventory is a major explanation for why house prices have been increasing every quarter over the last 6 years. And you can see from the chart, from July of '91, which obviously is a long time ago. Seen a big increase going through here. Obviously, we had the mortgage meltdown here, comes down, and then here we are coming into the current time. So the home prices have continuously increased, especially since 2011. This is kind of where we saw the turn, is this area here. So it's exciting that the confidence in the housing market has increased, which has created an environment of increasing home prices and increasing home values. So really good stuff there. A lot of this isn't a secret to you guys, but I just want to point it out as it'll help later on in the presentation. U.S. home equity wealth building, I kind of mentioned this in the second quarter of 2017. There were more than 14 million U.S. properties that were equity rich. That's up nearly, over 300,000 properties from the previous quarter, up by more than 1.6 million properties from a year ago, according to the Adam Data Solutions. 14 million equity-rich U.S. properties represent just under 25% of all U.S. properties with a mortgage, up to 24.3% in the previous up from 24.3% in the previous quarter, and up from 22.1% from Q2 in 2016. So obviously, increasing prices for existing homeowners that have been in a home at least a year. When you see a 5-year increase in price index, you're also going to see equity increase. So it opens up a lot of opportunities when you're talking about, where do I go next now that all my ERLs are gone, or now that all my FHA streamlines are dying off. So this gives you a good understanding of a good opportunity to go after. If you look at things on a regional level, there's 7 major metro areas. More than 90% of homes have exceeded their pre-recession peak values, according to Zillow. The vast majority of homes in Denver, Dallas, Nashville, Portland, Oregon, Raleigh, North Carolina, and San Jose, California are now worth more than they were roughly a decade ago. Nearly half of all homes nationwide are worth as much or more than they were in April of 2007. So just before everything went south on us, almost half of those homes nationwide are worth as much or more than they were. So that's huge, right? So we're back to kind of where we were in 2005, 2006 in terms of home values. I believe that the lending environment that you guys are living in is a much cleaner environment. So I don't expect a huge decline or collapse in the market like we had in 2008, which is a good thing. However, with interest rates rising and rate and term decreasing, you have to find these new opportunities through these statistics. So pretty good stuff there. That basically, I'm going to go back one slide, sorry. So just to touch on this. So when there's equity, Americans traditionally like to tap into that equity, whether that's a HELOC or a cash out loan. I believe that tapping into equity is going to be a huge opportunity moving forward. I have a lot of clients and partners that are already taking full advantage of that. In fact, one of the biggest buyers in the entire industry is spending more than 80% of its marketing dollars going after cash out and equity seekers. So pretty amazing stuff when you think about where we were just 10 years ago. Another market that is a very big opportunity, has been for the last few years. A lot of us, if you're not doing them already, you know somebody that is, how much money they're making per loan, and it kind of got away from us in terms of like how much people were charging to do these loans. And look, I'm not a loan officer any longer or a branch manager or anything like that, so I know from your side of the desk, for those of you that are focused on reverse mortgages, it was kind of a hit. To what end that hit, to what level of change that hit is going to mean is undetermined. I think there's a lot of unanswered questions, and as we go forward over the next 90 to 120 days, we'll get a pretty good understanding. But the reverse mortgage has been a big opportunity that we've been focused on for a while, and I think with the cleaning up and some of the changes they made, I think it's going to knock some of the people out of the space and allow for some more opportunities, as well as create more consumer confidence in the actual product itself. It won't be looked at as so negative. So I'm just going to read some statistics to kind of go through my notes here. 2,500 leads a month is what we generate on the internet for reverse, with the given criteria: 50% LTV, 62 years of age or older, single-family residence, basic criteria that you all are going to want to qualify somebody. We also generate 800 live transfers a month. More and more seniors are searching in the reverse mortgage as a positive solution for their retirement. Home equity is important for Americans across the age spectrum, as reverse mortgages can be an effective way to improve a retiree's overall security and consequently their peace of mind, and it just gives them a better quality of life. Financial advisors who traditionally in years past has looked at this product as negative, along with policymakers, academics, and also the media in general, they're slowly coming around to embracing this product. So, it's gaining some momentum and some confidence. It's not going to be every financial advisor out there that advises this to their clients, but there are more and more jumping over that line. From CNBC, USA Today, and even the New York Times, the headlines are much more positive than they have been in years past, as you that are focused on reverse loan now. The average retiring American couple, home equity represents about 2/3 of their total net assets. That's huge. So they have all the, whatever X assets they have, 66, 67% of them are tied up in their equity. They can't even touch because no one's going to give them a cash out loan unless they're doing this reverse mortgage product. So again, I don't have to preach on the value of the loan too much, but I just want to explain that, with the equity positions and all the cash-rich homes and the increasing values of homes, it's a great time for seniors to kind of jump into to this product. Median net worth for married couples age 65 or older is about $285,000. Of this amount, nearly $200,000 is in the home equity, $192,500 is in the home equity. Remaining $92,000 in non-equity assets, IRAs, savings, etc. Clearly, seniors need to include home equity and consider reverse mortgages as a part of the retirement income strategy, which means that if you're coming from the rate and term world and all you did was rate and term, you need to consider this as an absolute option for you to focus on. You'll notice later in my presentation that I really believe in niche-specific marketing and being an expert at one or two niches versus trying to be these master loan officers and originators that can do everything. So that's the reverse mortgage. So I think that's a very, very big product that you guys are going to have to take a serious look at and see if it's something that fits your model, if that's the segment of the market that you want to be lending to. So if you look at we do a lot of research at Best Rate Referrals. We don't just generate leads and sell leads. We also do a lot of consulting, but on the consumer-facing side, we do a lot of research. With our call center, we don't just generate transfers. We do a lot of survey work with homeowners that have inquired months and months ago to see how the process went for them, what they were looking for, did they achieve their goals, and just got a good feel for what the homeowner's state of mind is. We also do a lot of consumer tracking with search terms. So we're watching the consumer behaviors online, what they're searching, the terms that they're searching, and things of that nature. And it's pretty cool to watch over the last 15 years how consumers in the homeowners or home buyers' mind frame has really changed. It used to be rate. Who's got the lowest rate? It's not so much that way anymore. I think people are more looking for professionals, situational matching. If they're a veteran, they want someone that does veteran lending. They don't want to work with a loan officer that's all over the board. If they're a senior, they want to work with somebody that's focused on seniors and understands full realm of what the seniors are living for. They're not so rate sensitive anymore. It's a given that they're going to have a rate competitive environment, but they also want to work with a professional that understands what the market is. So including information there. So let's take a look at some things that we look at here on the Best Rate side when we're doing our consumer behavior analysis and research. They're searching differently. They're looking for a product specialist. They want a professional that understands the loan type that they're looking for. So here's an example. Old search term, 5 to 10 years ago would be something like VA mortgage rates. That'd be a Google search from a consumer. Today, we're seeing more and more consumers search for terms such as VA mortgage advisor, VA mortgage professional, VA mortgage loan officer, VA mortgage bank, right? So they're really looking for that niche-specific professional. Another example is FHA mortgage rates. That's an old term. People are rate shopping. New term, what we're seeing more of, FHA loan specialist, FHA loan advisor, FHA loan bank, right? I mean, these people that know they want an FHA loan, they want someone that understands the product in and out and has all options available to them. And one last one, equity loan rates, HELOC. New term is equity loan advisor. Folks that are looking to get cash out of their home or tap into their equity, they're looking for a loan advisor, a loan officer, originator, whatever term you want to use. They're looking for someone that understands all the programs available for equity so that they can ultimately get the best advice. Majority of buyers rely on both online resources and guidance from real estate agent during their home search. According to Zillow, again, 87% of buyers use online resources, 75% select a real estate agent or a broker to work with, suggesting that most buyers combine self-directed research using websites and apps, the market expertise, and the human touch offered by real estate professionals. It shows you right there that consumers are becoming more savvy, not just on the lending side, on the real estate side as well. So it's a good time to be in as long as you can become a professional with that niche. In fact, buyers who utilize online resources during their home search are significantly more likely to also use an agent. Pretty interesting. Percent versus 59% who did not use online sources. 77% versus 59%. It's a pretty significant difference. Buyers using online resources during their home search are accessing them from a variety of different devices. Most often desktop. However, mobile has become a big play in the space. 77% desktop, 56% mobile websites and mobile apps at 48%. So it's pretty significant. Utilizing mobile devices to search for a home is prevalent amongst buyers under the ages of 50. So if your target market is under 50, first-time home buyers, millennials, what have you, understand that marketing to these folks, even if it's just calling a lead for the first time or a referral for the first time, you're not able to get a hold of them, shoot them a text. So you can penetrate your leads and work your leads, procure your leads through text. You don't have to wait until you pull an application to have a text communication to complete the loan process. It can be started at the lead nurturing stage. So keep that in mind. Again, more consumers want a loan product specialist. What does that mean? Mortgage is an increasingly competitive landscape, and often the consumer gets lost, but the home buyer should at least be the center of everything. Your product needs to work for the consumer. So don't be an all-in-one loan officer that does everything. Focus on a niche that you really want to win and spend your dollars and your time marketing for that specific niche. Some referrals outside of the niche that you choose will drag you down and slow you down. Obviously, if it's a referral from a great referral source, you don't want to tell the guy no, but perhaps there's somebody in your office if they're looking for a reverse mortgage and you know nothing about reverse mortgages. Instead of you trying to figure it out, pass that along to somebody who knows the product. The consumer is going to appreciate that, much more. And really the proof is in the pudding. I'm going to show you a couple of examples here of, lenders that we work with that have become, the biggest in their respective space, and they've done that because that's all that they focus on, right? So let's look at Veterans United. Veterans United today, great client of ours, great partner. 95% of the loans that they do today is VA purchase. So from their media buys, their lead buys, through their loan officers, through their processors, all the way down the line, everybody is an expert at what they do for VA purchase. And that's why Veterans United is the largest VA purchase producer that's a private bank. Okay? Like these guys absolutely kill the VA purchase market. They're crushing everybody. And it's because they've built their entire model around one niche. Not only are they going after purchase and none of the rate terms or refinances, they're not spending their dollars there, but they've even segmented it further down to just VA purchase. So, that's one example of niche-specific and how you can grow your business. Now, I understand some of the, single loan officers and smaller branches are probably thinking, okay, well, they're a monster. They weren't always a monster. These guys built a great business around a niche. You don't have to be as big as them. If your shop's much smaller, you can build a substantial amount of business and wealth within your business for your people through being in niche specific and spending only your marketing dollars gearing towards a different niche. Another example is AAG, right? They're the biggest player in the reverse space. That's all they do. With the reverse changes, time will tell to see if they diversify a little bit into some of the forward things, but I can guarantee you one thing, the way that they operate, if they do diversify into other markets, it will be separate teams that are focused on those markets. I guarantee they won't take their reverse mortgage loan officer today and have them doing forward mortgages. They want them to be a professional and understand every in and out of that particular product. On a smaller scale, from a loan officer level or a small branch level or even a regional branch level, even if you have that call center, sales environment where it's centrally located, no matter what your situation is, pick a niche and master that niche. Spend your marketing dollars only on that niche. Okay, understand that niche because it's the highest rate of referral business as well. So moving on, I showed you a couple of examples there. I know they're the biggest players and they might not resonate as the best example for some of these smaller operations, but I'm telling you, you don't have to do 1,000 reverse mortgages a month or 4,000 or 5,000 VA purchases a month. You know the volume that you need to do to be satisfied, or maybe you have a goal above that. You don't have to be as big as these guys to reach your goals. Just be niche specific. So what does this tell us about the mortgage landscape? Basically, I just want to summarize everything that I've gone through so far. Actually, I think I might have went a little bit too far. We had a poll question after slide 11, NMP. Do you guys want to pop that poll question up?
Sure. We're getting some complaints about the audio. Maybe if you could just pick up your headset, that would be great.
Is that better?
That's much better. Yes. Okay. For our poll question, what types of loans are you doing more of? If you could pick reverse, refi, or purchase, and we'll see how that goes.
So I'll give you guys just a minute here to answer that poll question. NMP does a really good job of these poll questions and really gives them some insight on the focus of where you guys are going in the industry from a mass level, and also gives guys like me a good opportunity to see that as well. So, all right, so we're going to move on.
We're going to close the poll down right now. 69% of you said purchase, 22% said refinance, and 8% said reverse.
That's interesting. What were those again? You said 69% purchase,
22 refi, and 8 reverse.
Very interesting. I'm going to write those down because I'm going to start getting into a little bit of what BRR is doing. I'm going to break down our percentage of what we're generating, and I'm willing to bet they're pretty close to that. So again, just to summarize everything I've gone through so far, hot markets and good opportunities: purchase, cash out or equity loans, reverse, and then of course the new up and coming non-prime market. Again, niche marketing is key. I've been saying this for 3 or 4 years now. When we got into the internet space, that we learned very quickly that you have to have content about the niche you try and generate the lead for from just a lead gen standpoint. And then I've noticed as we transition our clients into niche specific marketing, they become more and more successful. The obvious, home values and equity is increasing. And then of course, just by your poll alone, 69% in purchase, that market's actually growing quite heavily. So that's good stuff. So, what is BRR doing today? Right. So, with everything, all the research that we've done, all the statistics out there, all the survey work we do on the consumer facing end, as well with our partners, all the consulting I do traveling around the country, sitting down with different business models and folks that run different business models, I should say, and seeing from the outside in, what are we doing to adapt, to that market? And the main thing that we realize is that, hey, we can't efficiently grow our company and help our partners by running 18 different niche-specific websites. We understand that consumers are looking for a niche-specific professional, but managing all those websites that we've done for the last few years has become very, very tedious. So as the industry changes and we've come to this niche-specific model, we're doing the same thing to help our partners capture that goal. So we launched a website called MortgageAdvisor.com, which is a loan program consumer professional match site. So as you can kind of see from my slide here, if you're looking to buy a home, go into the buy a home box, or if you're looking to refinance, every loans, VA loans, FHA loans, and reverse loans, right? Now, if you go into buy a home, it's going to give you some other options to look at, either VA purchase loans or USDA or whatever the program might be. And we have content and forms for everything from VA, FHA, USDA, 203K, pretty much anything that's relative in the market. We're going to have a page for and content and an option for that consumer to look. On the back end, when a consumer fills out our form, they're only going to be matched with the loan type that they are entering and looking for to a mortgage professional that also is looking to do those specific loans. So when you come to Best Rate and say you wanted to do a lead campaign with us, you can tell me what niche you want to go after, and we're only going to match you with consumers that match what you're looking for. And so this is a program match site. It's not a rate-driven site. There's no rate tables on the site. Nothing is going to be geared towards interest rates. It's all going to be geared towards a niche-specific match, professional match. On the live transfer side, we're running at about a 40, I gotta go to my next screen here. As you can, I did go one further, excuse me guys, sorry about that. So as of today, Best Rate generates about 67% of all of its internet or purchase. You guys are at 69%, pretty close, right? 10% is reverse, we're at 8%. And, we're at 10%, you're at 8%, excuse me. The other is going to be a 23. It's some type of cash out seekers or rate term seeker. Most of it's cash out or equity refinance, equity loan. They're trying to tap into their equity. And I'm going to go ahead and pull up these statistics here. So you can see, you guys are at 69% of you are focused on purchase. Well, 67% of leads we generate are purchase. 8% of you folks are, from the poll question, are focused on reverse. 8%, 8% of you, 10% for us of our leads are being generated. And then you guys have 22% for refinance. Well, we're right at 23% when you look at the two boxes combined here, this being cash out and this being other. So it's pretty interesting to see that, with a couple hundred people on a webinar, we do the poll question, that the percentages that you guys are focused on today are almost identical to the percentages that we're at today. So that's good. That means that I'm probably, my team is probably doing their job well, and I can go pat them on the back when I'm done with this webinar. So that's great. Good information, and securitize in my mind what we were doing is right. So that's great. And so slide 21. Do you guys want to throw up that other poll question now, Beth? I know we had another one.
Sure. The next poll question is, how many states are you licensed in today? 1 to 5, 6 to 10, 11 to 20, or 21 plus? We're going to let you answer that for a couple seconds and then tally the results. Okay, and the results are 84% of you are in 1 to 5 states, 7% in 6 to 10, 2% in 11 to 20, and 7% in 21 plus.
Good info. Good info. That's a good poll question. I appreciate that, Beth. Thank you.
No problem.
So as you can see, folks, where we're targeting, which almost matches up, with these percentages of what you guys are doing. Another thing that we're doing at Best Rate Referrals, which is, just as important, I believe, as all the research and niche-specific tracking and targeting that we're doing, is we've created ancillary ways for you guys to re-engage with leads that you've bought in past months. The average lead buyer in the space, or someone that's buying leads or transfers, or that some type of a marketing channel from a third party, generally you're working that lead on average for about 10 days. And then after the 10 days, you kind of put it into a nurturing status. It's going to get drip emails and maybe a text once a month or something along those lines. Pretty boring. It's the same thing in and out. Once the 30-day mark passes, the chance of you guys reconnecting with those folks is pretty slim. So when we got acquired in July of 2018 by Digital Media Solutions, it was a very strategic play by myself and my business partner. We wanted to partner with a company that had more technology ability to help us reach more consumers, and especially the consumers that cost you folks a lot of money when you're buying the leads to begin with. So, one of the strategies is called Reengagement. We have technology internally that will allow us to re-engage with your past leads. And we've been running this program for going on 6 months now. And for our current partners that have allowed us to do the re-engagement marketing for them to their past leads, we've been able to increase their conversion percentage by almost 25% of what their conversions were. So if you look at a time frame of 90 to 180 days ago, or 30 to 90 days ago, whatever your conversion number was, when we do the re-engagement for you through our SMS platform, our email platform, our direct mail capabilities, as well as our call center here in Florida, it's a 4-prong approach. You don't have to do all 4 channels, and in some cases we can't do all 4 channels due to TCPA rules. We're going to reach out to folks for so long. However, for the folks that we've deployed this for, we have increased the conversion that they saw in that time frame by 25%. So that's huge. If you were converting 8% of your leads, that means 92% of them were not converting. Well, if I can increase that from 8 to 10%, your overall cost per funded loan for your P&L on those months is lower, which is a huge win. It's efficient. And by the way, the best part of the re-engagement campaigns is it requires very, very little work or time spent on your end, and it's very affordable. The cost of re-engaging an old lead back into your sales funnel is about 30% of the cost of a new lead. I don't say that to prevent you guys from continuously buying new leads, but as you're buying new leads, you're running them through your funnel, and then they come out the back end after 30 days, and they're just in the nurturing status at that point. Let us come in, let us market to these folks and get them back into your funnel. That way your staff and your technology is being purely directed towards the new expensive leads that you're generating, and we're just adding some sales to the funnel. So re-engagement is a very good tool. We do re-engagement campaigns for some of the largest lenders in the country, but I also do re-engagement for some of the single loan officers that are buying their own leads. So it doesn't matter how big or small you are, how many leads are in your database, going back so far, whatever you have in there, we can re-engage some of these folks back into your funnel, and there's very little time and money spent on your end to do so. So re-engagement, I believe, is a big part of what we were missing as a marketing firm for years. And now that we've partnered with DMS, other than the other ancillary value we got from the acquisition and helping us grow, the re-engagement platform is probably one of the strongest opportunities that we have for you folks. Especially when you look at the changes in the space, right? Like for the 8% of you that are focused on reverse or do reverse loans, those leads are very expensive, as you know. And typically, the life cycle of how you work the leads is going to vary from branch to branch or person to person. But typically, after 30, 45 days, you're not really marketing to that lead as effectively as maybe you should. And with the changes that just came about in the industry, it's a great time to reach out to these folks. Hey, there's been some changes. Let's reevaluate your situation. Let's see if you can qualify now where maybe you couldn't before, or hey, home values went up over the last year, 2 years. Let's see if maybe you have enough equity to qualify today. Let's reevaluate and see how much cash you actually qualify for, right? That's a great hook. We've been doing some re-engagement campaigns on reverse just since October 2nd, And we've been able to re-engage over 12% of the leads purchased from us for our clients back into their sales funnel. That's amazing. These are leads that you guys probably forgot about. It was all on your past P&Ls. It's done. It's in the past. But if we can bring some of those back to light, you can close a few extra deals a month. It drops to the bottom line. It's very, very good. So with that said, I think I've covered most everything that I wanted to cover today. And so I'm going to go ahead and open it up for some Q&A. If any of you folks have any questions for me, now would be a great time to reach out and get those answered for you.
We actually did have quite a few questions. Brett wanted to know, what technology do you recommend your clients use for managing their leads and marketing channels?
I'm sorry, Beth, I didn't hear that. Can you say that one more time?
Sure. What technology do you recommend your clients use for managing their leads and marketing channels?
Oh, yeah, I get that question quite often, every week from people that maybe haven't bought a lot of leads before, or maybe they're not managing them properly and like to, see better tracking and overall statistics on what's happening within their lead buys. I really like Velocify. They're the 800-pound gorilla. They obviously are the leader in the space, and I like them. I also like Lead Mailbox. They're great customer service over there. I love the technology is very similar. Velocify might not want to hear me say that, but they're somewhat similar. Both companies are good. And then there's been a new one that popped up here in the last few years. It's gaining some momentum, and that's Accelerate. So you've got Velocify, Lead Mailbox, and Accelerate. Those are the three that I personally recommend. There's others, but those are the three that I recommend and know for a full fact that all of our technologies are tied in with their technologies.
Great. Sam would like to know, what trends are you seeing in the lead generation side of the business?
Well, it's with us, we kind of follow the actual market trends versus the lead generation trends. However, we do have teams that do a lot of analysis on lead gen from email or from SMS, text, or from different ways to do display ads and things of that nature. I'm noticing that from just a straight lead generation perspective, mobile ads, mobile communication, texting, even with the leads that you guys are nurturing, I think that from a lead generation standpoint, the biggest increase has been mobile. Something like 93% of the leads that we generate today are putting in their cell phone number as the main number of contact. It's a little bit lower for the seniors, obviously. However, shockingly, 73% of the leads that we generate from the senior community for reverse are also using a cell phone. So it's not, hey, the elderly and seniors are not, tech savvy anymore. I'm sure there's a small percentage of them that are completely untech savvy. However, there's a larger percentage of these folks that are now having smartphones. And almost everybody uses a smartphone that's not a senior, right? Almost everybody. So 93%. So I think that the biggest change in lead gen has been the ability to develop technologies around mobile marketing, text messaging, mobile ads, mobile click to call, pretty much, mobile re-engagement. Mobile's been the biggest trend that I've seen in the last year and a half has been the mobile.
Great. We have another question from Phil. He wants to know, how are these trends being measured and tracked, and how are you adhering to these trends to continue growth for your client's business?
So, we have a statistical analysis team here at DMS that manages all different verticals. There's about 40 people in the division, and we have 12 dedicated to the mortgage industry. And these 12 folks will track everything from the search term results. They'll take the analytics that we get back from our call center because we have a team in the call center that doesn't just do live transfers. We also have a survey team that will survey past leads to kind of see how the process went. So just statistical analysis from our own internal efforts, as well as some of the statistics that we can get from Google, also from other players in the space like Zillow and things of that nature. We take all of that data and then it's put in with our statistical analysis team and they crunch it out. And so I spend a lot of time with my business partner, Zach South, and that team, and that's how we come up with a lot of the trends that we're seeing. But really, following these markets and understanding where we're at, right? Understanding that, hey, equity is increasing, home values are increasing, there's a lot less rate and term available. Diversify your portfolio or your goals now, but don't diversify across everything. Diversify into one, maybe two at most loan products, right? And so the biggest statistical analysis that we do is actually with our partners. So we track and the closing percentages that are given to us by our partners, their app percentage, closing percentages, contact ratio, and we get these reports back. We call them disposition reports, and we get these back sometimes weekly, sometimes biweekly, sometimes monthly, depending on the client and partner. But we analyze a lot of that, and we notice that the clients that do the absolute best on not contact ratio, because that'll vary based on your technology, how aggressive you are, and all of that stuff. But the biggest tell that we saw was that the folks that are focusing on specific niches are the ones that are seeing a higher percentage of close ratio, right? If you look at a lot of you brokers would probably agree with me that you probably have the ability to beat out a Veterans United on pricing. Well, with that ability to beat them out on pricing, they're still the number one purchase VA lender in the country. And it's because they know the product. Their team knows the product. It's not just price driven anymore, right? So a lot of, in short, to answer that question, the best reporting I get back and the best analysis that I can do is based off feedback that my clients give. And I ask for it from everybody. I want to know how they're doing. I want to know what your contact ratios are. Because if there's a hole there, I want to help you bridge that gap and get more contacts on the phone, whatever it takes. I want to know what your app ratio is, because the app ratio from contact to app, that's going to tell me the quality of my leads, right? And what we're doing on our end to drive that traffic. And then of course conversion. I mean, the difference between a client that has loan officers in every niche and he's just buying basic criteria, 100K plus, good or better on credit, et cetera, like the old days, they're closing a lower percentage of the leads they buy, and their cost per acquisition is higher than somebody that may be spending a couple more dollars per lead and actually getting leads that fit their niche that they want to be good at or that they want to focus on. So the feedback from clients is the biggest tell of the trends.
Great. That was a great answer. We have a question from Patty. She wants to know, what are some upcoming trends that will impact how you generate consumer interest online?
We follow a lot of the, storylines, right? So for example, Reverse just came out with a change on the 2nd. So we started wrapping a lot of our new content, email marketing, SMS marketing, mobile ads around those changes. So sometimes you look at a change like a negative thing, right? Like, oh man, 15, this is the report I'm getting back from some letters, 15 to 20% of the business that we could close before October 2nd isn't going to be able to close after October 2nd. What in the heck are we going to do? And they got their arms up in the air. You got to use that change and spin it to your advantage, right? I mean, look, another example of this is, again, I've touched on it a few times, the equity increases. I mean, if you know that equity is increasing and that home values are increasing, why wouldn't it make sense that the history of Americans and the mortgages, when they've made money on their home, they tap into that money? I mean, that's not everybody, but the majority of folks, if they, are a homeowner, they all of a sudden just made 15% in equity, 20% in equity over the last couple of years. The standard way of thinking in America is tap into that money, right? We stay in debt here. So I think, with the trends that are coming, we don't know all the changes that are coming down the space, but I can tell you this, whatever changes are going to happen, we are going to attack those changes and use those changes to generate more leads. So whether you perceive a change in Reverse as being a negative change, or if you perceive a change in, veteran lending as being a negative, or any other lending for that matter as being negative, it might, from the surface, look like a negative aspect on your business, but it's all how you spin it. right? If you use that change to your advantage, negative or positive from what you were prior thinking, you can turn it into a positive, right? So just kind of give you an example here, just internally, it used to run us $84 to $88 to generate a reverse mortgage lead, right? Well, after October 2nd, since it's only been a few days, our cost to generate leads right now has dropped down to about $70 a lead, simply because we were able to spin content about the new changes in the space, and it generated interest, right? People wanted to know what those changes were. So there's a lot of people sitting on the fence, still educating themselves. We sent out some text messages, bought some ads, deployed some content to drive back to our site. And within just a few days, we've seen our cost per lead drop significantly. Now, what we're doing to help you folks is dropping the retail cost of those leads that same percentage, right? So we understand that you guys are going to, we don't know to what level they're going to take a hit. We know there's going to be some hit to your P&L or to your bottom line. And so instead of us saying, okay, well, we did a good job of spinning this content and this change in a cheaper lead cost, great, our margins are higher. It's not the way we've operated. That's not the way we've ever operated. We've always looked at what the cost is to generate a lead and push that lead at a cost that's going to, allow us to make the 20-25% margin that we need to make. So I guess in short, to answer that question, there's going to be trends that pop up that we're not fully aware of quite yet. But as those trends come up, we've done a good job over 13, 14 years of being a retail lead shop, of being on the front of those trends, whether it was HARP2 or FHA, PMI reduction, or the reverse boom, or now we're going into a purchase boom. We're really heavily focused on the purchase market moving forward. That VA, the non-prime, and then the reverse.
Great, thank you. Tim has a question. He wants to know, what are some of the biggest mistakes mortgage companies are making once they acquire a lead?
Yeah, so they're not working the lead properly. You really have to understand how to work a lead. And, I'm just going to give you the 1-minute cliff notes on this. And then if anyone has any further questions on anything, I'd be happy to jump on the phone with you individually and talk in length about your model, what you're doing, and how you could do it better. I'll do that for anybody. It's absolutely free. But the biggest mistake people make is they call the lead when they get the lead. Maybe they're calling it 2-3 times a day, which I do recommend doing, calling as many times as you can for those first few days. The biggest mistake they do is if they don't get a hold of the lead, they just go to the next lead. The biggest mistake you could do in today's environment, in the mobile age, the digital age, right, is to not text message your leads. When you receive a lead, call the lead as fast as you possibly can. That's a given. That everybody knows. What a lot of people don't understand is when you get that lead, if you've done your job and you're buying leads from a TCPA compliant vendor, you're also legally allowed to text message that lead. You don't have to wait until you make contact to send a text message. If everybody text messaged every lead they couldn't get a hold of immediately after they, didn't get a hold of them, your average contact ratio will jump 15 to 18%. So if you're contacting 40, 50% of your leads today, not utilizing text message, imagine how many more people will respond to you. Everybody looks at the text. Every single person on this call reads every single text they get. There might be 1 or 2 of you that get so many that maybe you get behind on them, but I guarantee you're going back and looking at them. So if you're looking at all your texts, what are other consumers doing? Everybody's looking at text. The biggest mistake people make is, if they don't get a hold of the lead, they chalk it up as, we'll call it again later. We'll call it again tomorrow. We'll continue to call it. We'll email it. Email doesn't get delivered half the time, and you really need to utilize text messages. The biggest mistake you can make in today's environment is not utilizing text message to actually work your leads.
Great, thank you so much. That's all the time we have for questions today. In closing, I'd like to thank you all for attending our webinar, and a big thanks to Ray for a great presentation. If a question you submitted was not one of the ones we had time to answer, it'll be sent to Ray. For all of the webinar attendees, a recording of today's webinar will be sent to you. We will see you on the next webinar. Thank you again, and have a great day, everyone. Bye.
Thanks, everyone.